It's all about the data. In this case, what's the data from the Q1 Self Storage REIT earnings reports telling us about the industry? Joining me today, the CEO of Tract IQ. He's the king of data in self storage. Noah Starr joining the show today. Welcome to Storage Unlocked, brought to you by PV Brown General Contractors. I'm your host, Thaddeus Campbell, Director of Business Development at S3 Partners. He shook his head when I said he's the king of data in self storage. When you get to be the host of the news podcast in storage, you get to proclaim people titles. It kind of goes part and parcel with the deal. First and foremost, congratulations on the birth of your daughter, Noah. So excited for you.
Thank you, my friend. It's great to be here. And I'm excited to talk to you about data and our webinar on Tuesday. And I love working with you, so I'm having a blast.
I appreciate that. And listen, I was only sad for the birth of your daughter in that we missed your typical Q4 2025 recap as you were out on paternity leave, but blessed that you were able to do that. That was pretty cool. I do want to say the last time you were on the show was back in January, and you were previewing the partnership that you folks had with Tract IQ, obviously providing the occupancy and achieved rate data for all the self-storage facilities in the country that are backed by CMBS loans. Talk to me about that rollout. It's been a little bit crazy. I know I've talked to you a little bit via text, but how's that going? And what's it been like for you to see the response from the self-storage community?
I think it's been really exciting. And, still every day we are getting the O.M.G, how is this possible reactions for the data. And just for folks who aren't familiar, we now track occupancy and achieved rate and financial data for more than $50 billion of assets across the United States. And I think this data already is leading to what I think is better decisions, more thorough underwriting, more defensible underwriting, and actually is a barometer for folks to actually leverage in their day-to-day underwriting versus before, when it was a lot more speculation, a lot more unstructured data that maybe your friend will send you. So I think the response has been overwhelming. And, our team obviously has enjoyed the influx and the excitement around our customers, but we have something next week that I think is even a bigger deal than that. So
we're 100% going to get into that for sure. We're going to talk about, and again, grateful that you've invited me to join you and John C. Lindsay next Tuesday. Very excited for that. We'll talk about it later in the show. If you haven't seen what Tract IQ is doing yet, go to TractIQ.com/TSSR. Check it out. Set up a time for a demo because it's transformational. I promised to talk about Q1 earnings reports. I'm going to tease people a little bit longer because I haven't talked to you since an amazing string of news items happened in the self-storage industry in what is an incredibly short amount of time. And so I kind of want to pick your brain a little bit about, started off with Noah Springer being announced as the first one was Blackstone refinanced $100 million portfolio for Basis Industrial, which I thought was news enough to start the year. Noah Springer gets announced as the next president of Extra Space. Then we hear Storage Mart's buying $1 billion portfolio in New York City. Public Storage, not to be outdone, they announced they're buying NSA. Then they go raise another $500 million in bonds. CubeSmart, another $250 million joint venture with CBRE. It's incredible the pace of massive announcements that are happening in the industry. From your seat in Tract IQ and what you do from the data side of it, what are you reading into what's been happening in the industry this year?
I think we've been talking about this for the last number of years together. There has been a continuing institutionalization of our asset class. And that is in full force right now. I think you hit on a bunch of really interesting highlights. But like swept under the rug, the NSA acquisition, I think, is the largest deal in self-storage history in terms of acquisition. I think Life Storage is up there, but all the things that you mentioned, groups are leaning into data, leaning into technology, and they're trying to find yield that generally revolves around having an edge, knowing things that other people don't. And by consolidating assets in these markets, by consolidating data and technology and investing in this way, I think we're just continuing to see that consolidation. And again, we expect this to continue, right? I think 3 years ago, 4 years ago, when Extra Space bought Life, and you saw all the other things that have happened in the industry. Feels like ancient history, but this is just accelerating because also you think about, I think, a scale of like public storage versus the operator with one facility. 5 years ago, I think that delta was like on another stratosphere. Today, maybe it's not the one facility operator, but groups who have 10 plus facilities relative to public storage, they're able to raise capital at really, really compelling levels. They're able to underwrite with speed and quality information. They're able to, move much faster and in a more institutional fashion than 5, 10 years ago. So I think we're seeing a culmination of all of that.
Interested to ask you, public storage raises $500 million, 5% bond sale, 10-year payback term. What does that tell you about their perspective on where interest rates are and what they see kind of as the long-term trajectory of interest rates?
Yeah, I think that, they use those proceeds to pay down the revolver. They want to keep liquidity intact post the merger or the acquisition of NSA. And in the context of history, a 5% interest rate is historically low. And I think we've seen, interest rates. I think the 10-year has been stuck at, 4.5%, kind of in that range for the last number of years. So I think we've seen a real settle in terms of like cost of borrowing. And I think the 5% rate is probably better than what most borrowers can get if they were to buy a new storage facility today. And I think public storage is demonstrating that, they're trying to take advantage of what they think is a low cost of capital, being 5%. And I think it's just another example of the years of borrowing at 2% or 3% are far behind us. And I don't think anyone should expect to see that scenario in the next decade, barring extreme events that I'm sure will happen because humanity and society tends to always have those extreme events. But yeah, I think it's a demonstration of public storage, wanting to solidify a good cost of capital. And, it also, in terms of like what's accretive for public storage, it means that the cap rates, it means that the yield on cost that they're going to have to buy for positive leverage now have to be in the 5.5 plus at least range for it to be accretive. So I also think it's a good barometer for folks to understand cap rates and what the future of cap rates could look like.
I think that's fascinating. In their Q4 earnings report, we broke down the Q3 earnings report, we broke down late last year. They mentioned buying at a 5.25 cap, looking at a 6 cap long-term yield. That's got to adjust a little bit as we've come to, I still, every once in a while, I hear somebody say when interest rates come down again. And I kind of do a double take now because the reality is it looks like that may not be what happens going forward. We may get into the new normal of, for those of us going out for an acquisition that aren't public storage, getting debt in the high 5s, low 6s, that seems to have become solidified. There was a question in there somewhere. I don't even remember what the question was, but anyway.
I mean, I'll say I actually think we are seeing the market settle because those conversations don't happen often anymore. I talk to dozens and dozens of investors and brokers all the time. And a year ago, 2 years ago, that was like the only thing people focused on from a macro lens. It's like, when is rates going to come down? Like, is now the right time to sell? Everyone, I feel like, mostly has moved past that. Of course, everyone who's buying and their livelihoods depend on transactions wants borrowing rates to come down. But I don't see that conversation happening nearly as much as it did a year or two ago.
We're going to come back in 30 seconds. Noah's going to talk much deeper about the actual Q1 earnings reports, which I promise is what we were going to talk about, but I couldn't go by without having a little bit deeper conversation about just some of the incredible things that have happened. We'll be back in 30 seconds after a quick word from our sponsor. Storage Unlocked is brought to you by PB Brown. Over $1 billion in ground-up construction delivered from single-story to Manhattan high-rise. Institutional grade, engineered for performance, and designed to stand out. Great storage catches the consumer's eye, drives traffic, and helps lease-up happen faster. From Manhattan to Miami, California to Hawaii, PB Brown is the GC to trust for your multi-million-dollar storage development. forgot to warn you that was coming. I forget the last time you were here, we weren't fancy enough to have commercials in the show, but thank you to our sponsor, PB Brown. Really excited to have them supporting these conversations and thankful that they're supporting them. All right, promise to get into the Q1 earnings report. Noah Starr's takeaway from Q1, biggest thing you took away when you saw the reports from the major REITs.
The biggest thing that we will reflect on from this earnings season has to be Public 4.0. I think they have clearly made their mark once the new leadership has come in, not just with the NSA acquisition, but with their whole 4.0 philosophy about their operating platform, about what they see as the future of self-storage and their own business. And so we can get into the REIT earnings in particular, but we're going to remember this quarter as Public 4.0 and the NSA acquisition. And my big takeaway from the NSA acquisition, and it's funny, we have been talking about this, I feel like, for years, but we have always said, like, no matter how big of an investment company or storage operator you are, you always need to be mindful of what the REITs are doing. And historically, Public Storage has only really bought in primary markets. So Public Storage's capital flowing into markets didn't impact you if you were in a secondary or tertiary market in a major way. It did, right? Because everyone would use the primary market as a barometer for what a public storage or extra space could do. But now they're in all the secondary markets and they're in tertiary markets. So if you never really thought about public storage, now they're everywhere. And it's also a testament to the confidence and conviction that they have in their operating platform, in their new leadership, to be able to take on a transaction of this size.
I was going to ask you that before we went to break and I ran out of time and I didn't, but I'm going to ask you now. They paid a 35% premium on the price NSA was, well, they announced that they were planning to pay a 35% premium on the price NSA was trading at the day the deal was announced. NSA, not surprisingly, has since spiked pretty well. How do they plan to be able to maximize the profitability of that acquisition in a way that allowed them to go out and make that kind of a compelling offer to NSA?
Yeah, I think there's a couple of things, and we've seen, even in their margin. Let me actually just share my screen. I'll show you this one slide. I don't have NSA's numbers on it, but you'll kind of see. So this is actually looking at just 2023 and 2024 public storage, extra spaces, and cube smart facilities that we have data on. This is not their earnings. This is actually like what we see at the facility level. And consistently, public storage has had the highest NOI margins. And they do that in two ways, right? Number one is they tend to get higher achieved rates from their operations, from the quality of their stores, and then the second is on expense control, having a really efficient operation. If you think about the NSA stores in these secondary, tertiary markets, right, the first thing that public storage is going to do is, I'd say, bring them up to brand standards. So they're going to spend millions of dollars across all of these stores, new paint, fixing all the doors, new security systems, maybe adding on-site personnel, adding in all of the things that are going to bring this up to brand standards. And what that allows you to do is allows you to either attract a newer, higher income tenant base, or just have better tenants altogether and or charge higher rents, right? So they're going to make those investments at the store level. And all of that culminates in most likely being able to achieve higher rates than what the NSA brands were able to do. And then if they manage these stores, the way they've done in the past, maybe they even try to, bring in some efficiencies across. Maybe there's some hub and spoke locations, all sorts of things they're going to try to figure out. They very much feel like they can drive much more NOI as public storage than as these standalone NSA brands.
This is fascinating to me on many levels. The biggest one being How does a smaller operator compete because look, if Public Storage can come in and they can offer a 35% premium over the stock price that NSA is trading at, they're saying very clearly, we can run these stores better than the people that are operating them right now. And they're not talking about mom and pop owner. They're talking about another one of the REITs that's pretty well respected in the industry. How does this smaller operator in 2026 grow a portfolio and compete in that environment? Or are we now at a place where if you're building a portfolio, you really should be building, and I'll never forget, you said this the first time you came and joined the show and did a REIT earnings report, you should be paying attention to the REITs because that's your eventual buyer. Is that really the outcome at this point? As Storage Mart buys $1 billion portfolio in New York City, they must see some upside there. The Manhattan Mini Storage brand able to raise NOI in those stores, Public Storage buying NSA. Is that what we're going to see? We're going to see a few really big players in the institutional level facilities, and smaller operators are really just compiling for a potential exit.
Yes to all of it. I think it really depends. And I'd say for the smaller to mid-size operator, I think it's all about being really intentional about the kind of tenant base you're looking to attract, the type of unit mix you're building, the type of quality you want to have. If you're in a secondary or tertiary market and Public Storage has a multi-story climate control building with elevator, premium, on-site manager, but your drive up mostly non-climate, right? Lean into that, right? And you're going to have some advantages over Public Storage. You'll probably be able to have a lower basis on a per square foot basis. So you'll be able to charge lower rates. You'll be able to do things that Public can't do. Like you'll be able to work with the customer more. Maybe there's some creativity over the structure of payments. Maybe you can agree to not raising rates for a period of time and you want to be transparent, right? There's a lot of strategies that smaller operators can implement. But what I would say is 5 to 10 years ago, you can probably get away with not having a Google business profile. You can probably get away with not having the best website. You can probably get away with having subpar move-in experience. Today, I don't think you can. If you're not on Google and you don't have a Google business page and you don't answer the phone, times aren't as good where you're just going to be full all the time in most markets. If you don't do advertising, you don't do SEO, if you don't have quality management at the store where you don't deal with auctions, you don't respond to your tenants, there's, trash left all over the facility, you're not going to succeed, right? So I think like the bar has been raised for everyone, but that doesn't mean that there's no opportunity for the smaller groups.
I love watching it play out. There's a couple of smaller groups I've been exposed to in the past few months that are just, young guys, that young women too, that are just leaning into the technology side of it to compete. And it's fascinating to see because it seems like if you're not bringing something very unique to it and still be able to run operations, as you said, at a very high level, it's hard to see folks not getting left behind and to start to see that gap between the really high level operators and others start to get even bigger. Do me a favor, stop sharing your screen for a minute. As much as I love this graphic, I'd rather see you. I want to ask you about same store NOI growth. Public Storage reports plus 0.4%, first time in 3 years. Extra Space actually reported plus 1.2%. Significantly higher than Public Storage. So my first question for you is, why Extra Space triple the same store net NOI growth as Public Storage?
I think I'd have to dig a little bit deeper on that metric in particular. My sense about the two main, there's some differences between Public Storage and Extra Space. And I also think it depends on like what stores you're bucketing in that number. And obviously there's headlines, but Extra Space has a booming third-party management platform. And when you think of a third-party management platform, there's no risk, there's no real expenses, it's just income, right? So the more third-party management stores Extra Space adds, the more income that they're going to generate. The same thing for their bridge lending program, right? There's a lot of income being made there. And then even for Extra Space in their third-party platform, they take all the insurance proceeds, right? So they're able to do lots of things in that way to boost NOI versus Public Storage has 600 million plus of development sites. Their agreements are a little bit different, and their third party management team is not nearly as large as Extra Space, and their bridge lending program is significantly smaller. So I think there's a lot of differences between the two, and so that kind of gets shown in all these metrics as to why they're not going to all have the same metrics. They're not all identical in each way. There's correlations between all the big REITs, but there are some major differences that people should be aware of when they compare the two or the major REITs.
As you're tracking data, the fact that both of the two largest REITs finally show positive NOI growth after 36 months, however many quarters that is, 9 quarters of showing negative same store NOI growth. Is this saying something about where the industry's at in the cycle? Have we finally gotten through what's the most prolonged downswing in the history of the industry?
I think that I think it's hard to say, but let me share my screen and we'll look at some of this information here. So I've kind of got and this will be on our website in the coming days, so everyone will be able to view this and see the nation versus all the top 50 MSAs. But if you actually just look at the rates since 2019 at the national level for the 10 by 10, you can see we've more than passed the COVID boom, right? So COVID boom period, you can see all the rates were super elevated. And then since 2023, we've kind of been at a normalized state where you can see some seasonality now starting in Q2 and Q3, and you can kind of see some ebbs and flows. And, we're still, we're now kind of at the bottom in this graph over, the last 8 years or so. So I do think that now is a very good time to get involved in storage. If you can find assets that are cash flowing from day one, that cover the proposed debt, that work at today's underwritten levels, that feels like a really good investment opportunity versus 4 years ago when I was investing in storage and you had to underwrite not just to 92% occupancy, but you had to underwrite to rent growth over that period of time just to make the deal work. And I think that's a really a big sign of the times. If people are buying properties based off today's income and that works, you're kind of at a really healthy state of the cycle relative to, doing other ways to make the returns pencil.
Interesting to start, as I talk to different brokers in the industry, starting to see those deals actually start to trade again, where they're, I would say, realistic deals. So many more roads I could go down with you. I want to talk about the big event you have coming up next week. Before we talk about Noah and Tract IQ again debuting more things in their platform that are mind blowing, we're going to take another quick break. We got our second sponsor, S3 Partners. We'll be back after this commercial. In self-storage or small bay flex, execution matters. S3 Partners moves projects from concept to completion with 3 integrated services. Project Sync manages your development, vendors, timelines, budgets, and construction oversight. Market Expansion sources opportunities in the right markets to grow your pipeline. And Deal Sync delivers institutional level underwriting so you can pursue projects with confidence, helping you move faster and build smarter. S3 Partners, storage, flex, growth. As you always do, you put up a LinkedIn post, it must be more than a month ago now, somewhere around there, and you talked about, hey, would people like to tune in and see us break down a deal live? I got sucked in. I'm like, yep, would love to be a part of that. That sounds like a lot of fun. You guys were not content sitting on the deal you made with TractIQ and the incredible CMBS data that you now are giving your platform users access to. You're adding another level to what Tract IQ is able to do. Tell me a little bit about what's coming up on Tuesday, why this evolution in your platform, and what you think it's going to do for your users.
Yeah, I mean, for the last 2+ years, the feedback from the industry has been consistent. People want accurate information, and they want to manipulate that information however they want. And, in the history of technology, the way you would do that second part is you build UI, you build, try to build custom experiences in your product. And now with, AI and all the new technology that's come out, we have an opportunity to truly make the data available in a way that was never actually possible. I had coffee this morning with one of my former professors at UT, kind of explaining what it was like, 10 plus years ago for me to be in school, have to manually build a model and build a memo. And then in the institutional world, right, you're in Excel, you'd spend a week building a model in Excel and building a PowerPoint presentation, and you'd trade nits back and forth between your team. And a week would go by, and then you send it and you hope that everyone likes it. All of that is now totally flipped, where it can happen much faster than a week, let alone 20 minutes or so. So I think all the new technology has made quality, accurate data the most important thing that everyone's looking for, and that's what we specialize in. So we're going to try to make it available in a way that's never before been possible.
Excited. I am not shedding a tear for you. I never had a computer in college. The first time I saw a website, I was in graduate school. Excel debuted in it debuted in the month I turned 12 years old, but very, very few people used it. So I think how I feel based on what you're feeling from your time in college 10 years ago, maybe a little more. For me, being in the graduate school, I finished in 97, to see the speed of what's happening and the rate of improvement is absolutely mind blowing. My guy behind the scenes, Eric's going to put the graphic up for next Tuesday. John C. Lindsay gives us a live deal, a deal that he's got out on the market, and Noah's going to run this through Tract IQ. He's been kind enough to invite me. That's a version of me that still had hair. I got to get a new headshot here done soon, but the smartest half hour in self-storage. You can register, guys, at the link that's on the screen. Going to be a blast, absolutely, seeing what Noah Starr and his team are doing at Tract IQ. I've said this before and I'll say it again, Noah. I am so grateful that last year when Chris Berg, who was my original co-host of this show, when we first started doing the show, I reached out to you first to be our data partner, and cannot be more thankful that I chose to reach out to you to see what you guys are doing and the absolute passion you have for bringing the best data to the industry, and not just talking about it, not just saying it, but actually doing it on a daily basis. Proud to have a little bit of connection to you guys to see what you've been doing, and really excited to be on that seminar with you next Tuesday.
I appreciate it, Thaddeus. It's honestly like I'm at the point of my career where I really want to focus on working with people that we just enjoy being around, who challenge us, who just kind of speak the same language. And it's been so much fun working with you. And I say it publicly, but I say it privately too. It's just a blast to have you in our corner and, pushing us, because, I think the way that we will fail is complacency. And I think we're still just getting started, and excited to show the industry how we can kind of empower everyone with some really awesome data.
Appreciate you guys. Appreciate what you're doing. Wish you nothing but continued success. You guys can subscribe to Storage Unlocked by clicking on the link below. As always, I want to give a shout out to a couple of upcoming events. I always get on the pulpit and talk about the need, especially as we see consolidation getting faster and faster, to stay involved in state and regional SSA events. We all want to go to the big shows. For the national SSA, couple upcoming things I'd love for you guys to take part in. The Northeast Storage Expo is next week. Actually, I'm headed up to Foxwoods, a resort in beautiful Connecticut. That'll be an awesome time. Really good folks up in the Northeast. Don't neglect the New England self-storage market. Excited to go home for a little bit and see that. And then the following month down at National Harbor outside of Washington, D.C. is the Mid-Atlantic Show. If you have not already registered for the Northeast Self Storage Expo, it's not too late. You can use the code Thaddeus10. You'll get a little discount off your registration. I don't have a discount for you on the Mid-Atlantic Show. I'm sorry for that. But get involved, stay involved. So much legislation that's affecting the self-storage industry being introduced around the country. We didn't even talk about the legal issues in New York City and what's going on there today. We could have touched on that for sure. Get involved, stay involved. Let's help keep this industry as great as it's been for 50 plus years now. He's Noah Starr. I'm Thaddeus Campbell. One more shout out to my friends at PB Brown General Contractors. Can't thank them enough for supporting the show. If you have a ground up development project in storage or small bay flex, reach out to them, get them involved early. They'll really help you understand the entitlement challenges and the costs associated with your project. That's all for this week's episode of Storage Unlocked. We'll see you guys next week.